top stocks under $20 everyone can afford. Number 1. Lucid Group. Despite numerous transportation experts' claims that electric vehicles are the future, the harsh reality is that the future may be a long way off. Everything boils down to basic economics. The average transaction price for an EV this year, according to Kelley Blue Book, is around $62,876. Given the median household income in the United States, few families will spend 90% of their earnings on a car. True, some EV manufacturers specialize in ultra-compact cars or electric trikes, but Americans have never embraced such dimensionally challenged rides. This is why the Lucid Group is popular. Say what you want about the difficulties that EV manufacturers face when attempting to dethrone Tesla. Lucid, on the other hand, makes no pretense of selling to middle-income consumers. Instead, Lucid is entirely focused, at least for the time being, on affluent drivers. To be honest, with average EV costs skyrocketing, it's the only consumer demographic to target. As a result, if you have the patience, Lucid Group is one of the best stocks to buy under $20 right now. Number 2. Kinder Morgan. Kinder Morgan, one of North America's largest energy infrastructure companies, plays an important role in the overall national security profile of the United States. Kinder Morgan has an ownership or operating interest in approximately 83,000 miles of pipeline and 141 terminals. Furthermore, the company's pipelines transport natural gas, gasoline, crude oil, carbon dioxide, and other critical resources according to its website. Furthermore, Kinder Morgan terminals store and handle renewable fuels, petroleum products, chemicals, vegetable oils, and other commodities. Unlike energy companies that are solely focused on exploration projects, which are subject to extreme volatility, Kinder Morgan is focused on everyday energy needs, allowing for relative stability. What makes KMI particularly appealing is that the equity unit has experienced some losses as a result of recent pressures in the crude oil market. President Joe Biden's administration, for example, authorized the release of crude oil from the Strategic Petroleum Reserve. However, this and other factors have combined to make Kinder Morgan one of the best stocks to buy under $20 right now. You might want to think about the opportunity before it fades away if demand returns. Number 3. Battalion Oil. Battalion Oil is a high-risk, independent energy exploration and development firm. Cloud exploration projects pose health, safety, and environmental risks. Furthermore, there is the possibility that drilling efforts will be unsuccessful. As a result, conservative investors may be better served by midstream players rather than upstream businesses such as Battalion. Having said that, each investor is unique. If you have a risk-taking personality, Battalion Oil could be one of the best stocks to buy under $20 right now. While Battalion swung higher for much of this year as a result of Russia's shocking invasion of Ukraine, which sent energy markets into a panicked frenzy, pressures on the hydrocarbon sector have begun to weigh on it. Along with the increased supply associated with the Strategic Petroleum Reserve release previously mentioned, rising inflation appears to have altered consumer behavior. Specifically, Americans are driving less, not including under special circumstances like Memorial Day weekend. However, all that is required for the energy market to recover is another catalyst, such as the return to work. As a result, investors should keep a close eye on Battalion Oil stock. Number 4. NUSCALE Power. For good reason. A lot of people have been talking about NUSCALE Power for quite some time. NUSCALE, an innovative take on the nuclear energy debate, specializes in small modular reactors, which are nuclear-powered facilities with a much smaller footprint than their traditional counterparts. In theory, small modular reactors could be deployed in areas previously inaccessible to large nuclear power plants. Among the many intriguing applications of SMRs is the ability to power reverse osmosis desalination processes. While the technology to convert ocean water into drinking water has always existed, the process requires a lot of energy. NUSCALE's small modular reactor technology may be able to fill the opportunity gap, resolving multiple future crises with a single solution. To be fair, there are many concerns about nuclear energy and the risks of events going wrong. Furthermore, NUSCALE went public through a reverse merger with a special purpose acquisition company. While NUSCALE is not for the faint of heart, it is one of the best stocks under $20 for those willing to ride through some rough seas. Number 5. SYMBOTIC. Supply chain disruption is one of the coronavirus pandemic's signature pain points and its broader impact on global commerce. People were suddenly made aware of not only headline problems, but also the minutiae of disruptive events, such as container shortages and the clashing of economic incentives, such as being paid by miles driven versus compensated by the hour. While we are not presenting SYMBOTIC as a cure-all for our problems, it may provide a much-needed helping hand. SYMBOTIC, which specializes in cutting-edge robotics and automation technology, aims to improve supply chain efficiencies. As an end-to-end solutions provider, the company has the potential to assist enterprise-level clients in identifying and addressing frictions, thereby improving the bottom line. To clarify, SYMBOTIC also went public through a reverse merger with a Special Purpose Acquisition Company, or SPAC. SYMBOTIC stock may not be suitable for everyone, given that SPAC-based business combinations have underperformed the benchmark equities index. However, if you have some money to speculate with, SYMBOTIC stock could be one of the best stocks under $20 to buy right now. Although 2022 hasn't started off as well as bullish investors had hoped, the red ink does open the door for the best stocks to buy under $20 right now. Many prominent financial advisors have stated that the silver lining in any bearish cycle is the opportunity to acquire high potential companies at a discount, which would not be available if the equity sector was in a frenzy.